Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. Yesterday, drop started pretty accurately from the specified target that we have discussed in the video. So currently, you probably already either closed the position or have the stops on the break even. And at this moment on the gold, we have the same tricky situation as on the euro currency. So although the overall performance stands not bad, and this market shows the drop, but we have the patterns that stands against the recent drop, and it add more risk to the overall position. So, it really makes sense to consider this scenario where you just close it and wait when this pattern will be either completed or cancelled by the price action. So it doesn't mean that market can't go lower in recent time, but it means that the price could change the shape a bit. So by taking a look at the interest rates, as we said, this type of the consolidation usually is bullish type, and it means that rates should keep going higher. So once we have said that, and right in this day, as you can see, market shows the further upward direction on the rates. Market hits the 167 level. So, and that agrees with the drop on the gold market. At the same time, if you'll take a look at the gold follow time frame chart, market has formed here the bullish grabber, and in general it stands at the support right now. So it's this tight consolidation. Lots of mess was here in the recent couple of weeks, and the major problem here is the grabber. It suggests the top of taken out of this top. If you will keep stops right at this area where we have taken the position, you probably will be out by this upward action. So it means to consider possible closing of the current position and wait when this grabber will be either cancelled if market somehow will drop below the area, or when it complete the target, which is potentially might be the ABCD pattern. So it means if grabber will be completed, we later could get Gartner's cheap also sell pattern, where market theoretically could show another extension to the downside. But at this moment, this grabber brings lots of risk, and I do not see any reasons why we should accept it, especially when we have the in general positive position currently in profit that we have taken recently. This is for those who have shorts. If you don't have any position, you correspondingly could consider the possible taking maybe long position based on this recent action, based on the grabber, with the stops right below this area. So this is another alternative scenario that theoretically could be considered in current moment. For that purpose, so you could take a look at the hourly chart. This guy's ways, by the way, how the recent drop has started, so pretty accurately right at the resistance. Nice action was actually. So in here, if you consider taking the long position, for example, your stops should be somewhere below this area, because you base your trade only on the grabber, and if it will be cancelled, it makes no sense to keep it more. And now you could use minor fib levels, drop your time frame, say to the 15-minute chart, put here the fib levels, watch for retracement, for instance, to the 30%, maybe to the 618, and take the long position with the stops below this area. So that's alternative scenario that you could keep an eye on. Of course, you could just do nothing and wait for clarity of what will happen in nearest time. So, finally, this, for those who have the short, of course, you could use the combined scenario. As on the euro currency, you could just, for example, book a result on the half of your position, keep stops at the break even on the resting half, and see what will happen. If you'll be out on the break even, well, no problem. But if market will still keep going lower, well, you will have another half of your position that you could stay in this trade. So this is also makes reason to do. It depends on the value of your position. So that's actually what I would like to warn you about in the gold market. Let's keep watching how market will take care about this situation.